Good afternoon to everyone. Today's sessions we are going to discuss about the obvious topic: will Nifty become a Sensex? Now we are actually at a time when the Sensex is at 53,000 near level, and we are thinking where the market will go from here. Now, a lot of investors are worrying that what exactly is going to happen from here. So I'm going to show you in a very simple terms today that what exactly we think that market is going to behave in the days to come. And I'm not going to use any financial jargons to make these things very simple for all of you. So as we move ahead, we are having obvious questions that says that is it an all-time high or market is at till date high? Okay, so we just need to ask a question like all-time high. It's a statement where we say that market is reached this level and it will not going to move high from here. And every time market reaches a new level, we say it's all-time high. So the right statement, the right narrative, the right mind frame will be till date high. Okay, so we move ahead with a concept called till date high. Now, if you see this graph carefully, it's a narrow period of graph. I have not mentioned any duration out here. You will see the market looks very volatile. It goes up and goes down and then goes up and down and like spikes. Now, if I stretch the same period over a longer period of time in my next slide, you will see the same slide, the square of period, which I shown earlier, now looks much more flatter. So in a longer term, market will look much more flatter, as is obvious from the slides which I shown to you. How many of you have heard the name Goldman Sachs? Obvious, the question is not right in this forum. Well, probably most of you have heard this name Goldman Sachs. Now, can anyone tell that how long is the period that this company is all about? Now, when this company is formed? So since this is a one to many presentations, I am not able to see all of your face. So you might have heard this name Goldman Sachs, and a couple of you might be knowing that how long this company is into existence. I just give you a number that this company has been formed in 150 years now. So okay, so there's a 150 years of experience which goes into Goldman Sachs company. So just to mention that 150 years of experience is huge enough for anyone to to give some predictions or guidance, or someone seeks guidance from. Now let's see what Goldman Sachs has done in the last last couple 1 year and so. So we all know that this company is 150 years old company, and now let's see what they have done. Can you predict the market? Now, if I ask the questions in April 16, 2020, Goldman Sachs has predicted Nifty to be around 9,600 level by June 2021. So that's come into the business line column. So, but we all know that Nifty is at way higher than that level exactly. Okay. So so a 150-year-old company predicting that market will reach this level. Going wrong in the time of April 2020. So Goldman Sachs revisited their plan, and in November 12, 2020, they predicted that Nifty will be at around 14,100 level. So again, they have been wrong, by a larger margin. So you can imagine that a company, 150-year-old company, can go wrong in predicting the market. Okay. 150-year-old company can go wrong in predicting the market. So it is very, very difficult to predict the market. There are two things which normally people cannot predict. Like one always say that dawn ko pakadna mushkil hi nahi, namumkin hai. The similar thing, you cannot predict market or the stock specific in any condition. So whosoever is claiming that they can predict the market which way will go, it's wrong. So we can only estimate, but we cannot predict the exact numbers going ahead, as is evident from the Goldman Sachs last year prediction. So as I already mentioned, before going ahead, we all know that this is the trend which we have seen in 1990. We have Sensex was that level. 2020 we have this level, and when we're talking about 2030, where the Sensex will go from here. So that's normally the questions which is there in today's presentation. As I told you earlier, we are going to make it very simple for all of you to understand what we think the market will go. We are not predicting; we are making a rough estimate of where the Sensex might go from here. Okay. Now, before going ahead, I just want to show you one example. This example is very important. Just keep this example in mind. In a picture, you are seeing that there is a horse which has been tied up with a vehicle. Okay, so when we talk about the stock market and economy, it is just like this thing. You know, if the vehicle is the economy, this horse will be a stock market. It's not a vice versa, right? So if the economy is going ahead, the stock market has to go ahead. It can go a little bit higher, a little bit lower, because there is a rope inside. So, but it cannot go beyond any level. Similarly, if the economy is going down, the stock market has to go down. Okay, it can move a little bit here and there, but it cannot go. So keep this picture in mind whenever in the next couple of sessions that I'm going to take, couple of presentations that I'm going to take from here. Just okay. Now, coming to the interesting observations, like this is a Warren Buffett indicator, which I've shown here from 2008 to 2021. Like in 2021, the market, the Sensex is in the March is 50,000 level. GDP is 194 lakh crore, which is round about $2.6 trillion. Market cap is 197 lakh crore, and market cap to GDP is 101%. That's in a March figure, right? And we know all these things. In a January 2008, market cap to GDP is 148, and it crashes down. And we have the market cap to GDP in 55%. So market cap to GDP is one of the lead indicator of where exactly our market is like. So on a layman language, if you see that the market cap to GDP is on a higher terms, like what exactly is there, you will know the market cap is costly or cheaper. So right now we are at near about same level to what market cap to GDP is actually like. So Sensex at 53,000 level right now. This is in 2-3 months back data. And we are the market cap is like 197, 199 lakh crore kind of thing. So we are nearly same to what the GDP and the market cap is like. And exactly that's why I'm saying that market is not costly and market is not cheap right now. It is going at the same level that it should be. So keep this data in mind. I'm going to show you some data point in next couple of slides and able to understand more clearly. Now, we have all know that the Narendra Modi government has already predicted or already said that by 2024, when this general terms will over, they will reach $5 trillion economy. So right now we are like 2.87, $2.9 trillion economy, and by 2024 they projected it to reach $5 trillion magic. But probably because of COVID, that data of $5 trillion might get stretched a little bit to 2026 or 2027. That's a rational term. I'm also going to tell you why GDP from $3 trillion approximately right now is going to reach that number, irrespective of whatever government comes and whatever things happen. Okay, so let keep that information for later slides. So we all will assume that GDP numbers is going to increase from here. Probably not 2024. It might be 2026. So that's the kind of data we have. So I have done a little bit of Excel of calculations. Okay, so we have already shown you last time that GDP is at 195 lakh and market cap we have 197 lakh, which is about near about $2.7 trillion kind of economy. So we have like 101%. We have neck to neck 1:1 ratio. Like so, if we and Sensex is at 52,000 and Nifty is at 15,000 level. So if we take GDP, which is out 2.7, $2.8 trillion right now, if we take GDP to reach $5 trillion, probably in next 2 to 3 years, what this number is going to change from here. So currently we are at $2.7 trillion, which is equal to 197 lakh crore if you calculate that thing into trillion dollar terms. Now let's see what is going to happen from there on. I'm taking into consideration that INR to dollar will be, currently it is like 74. I'm taking into consideration by 2026, it will be like near about 80 roughly kind of thing. So plus minus couple of points here and there. And by 2026, I'm taking GDP to be $5 trillion economy. Okay, so we are like 2.87, the $5 trillion economy. We have taken 2 years stretch because of pandemic and slow it down happening. In that scenario, what this number is going to happen? Obviously, GDP will be 400 crore. In last figure, we have already mentioned the GDP is 195 crore. So it will go double to what exactly has happened. So if GDP move double from here, the market cap will also move double from here. I've already shown you market cap to GDP ratio is 101% level. So I'm going to show you in next slide that what is going to happen. So if the market cap also move on as per the GDP 100%, okay, if the market cap is also moved GDP as per the 100% level, then Sensex, which is at 52,000 level, will also be doubled if you reach $5 trillion by 2026 at 1,07,760 point, okay, and Nifty 31,000 level. If it doesn't reach double 101% level, we already presume that GDP will going to reach $5 trillion. If it reach 80% of that level also, then Nifty is going to touch 25,000 level and Sensex 86,000 level. So that's the data. So and if we take a little bit aggressive calculation like $7 trillion by 2026, the Sensex is going to reach 1,50,000 level and Nifty is going to reach 44,000 level approximately. And I'm taking exactly the same 100%, which is a rough estimate, which is exact calculation of what normally happen with market cap to GDP, which is a lead indicator, which is a main indicator. We call it a Warren Buffett indicator. I'm not talking any excess. I'm not talking any excess market value of India. I'm talking exactly what is the fair value of India will be like that time. So that's so by the fair calculations, just by fair calculation, just by taking into consideration GDP number, we can easily say that market is going to reach the level that we are predicting. Like if not, if you say 1,50,000 level, but we are if we assume that market to go reach by $5 trillion by 2026, we are able to reach 1,07,000 and 8,000 level by that time. And we already showed this data point just to make sure that we are 101 is normal, 100% is the normal rate where it is not fair value or not costly. So taking into these considerations, we can easily say that Sensex or Nifty is going to be double from where we are currently in 2026. And if we take a little bit longer time, like 2030 or 2031, then it's going to double, going to increase from more than from that particular level itself. So you can see what I mentioned earlier, that can Nifty become a Sensex? Now, if you only see the GDP numbers today and is going to happen in next 2021, in next 5 years, you easily can predict that what exactly with the market will go just by market cap to GDP model mentioned here. Now the big question is why the GDP will grow from here? No. So a lot of people might think that GDP will go negative. Will it go negative for India? Well, I'm not saying anything, and let the data speak for me. And so let's go on the next slides kind of thing. Now having said this thing, now we all know that GDP is going to increase from here. Obviously, in a couple of slides, able to understand that where to invest right now at 53,000 level. A lot of investors think that where to invest, this stocks, that fund, or that fund itself. And some people, I thought that some people keep saying that take Reliance at 2,200 level or HDFC Bank at that level and that level. So it doesn't make sense. It's like when I heard this thing that take Reliance at 2,200 level, it's like you are playing football in a ground where there is no bar post. If you play football in a ground where there is no bar post, you will go here and there. You will kick ball here and kick there, and there is no particular goal in that. So what I mean to say out there is that whatever your investment, whatever amount of investment you want to do, there should be a proper goal behind that. Suppose, say for example, in 2021 you have 1 CR amount, and in 2030 you're aiming for say for example 5 CR kind of thing. So very clearly that today I have 1 CR and next 5 years or 6 years or 10 years I'm going to reach 10 CR. Now basis on that, you make a target. There are various instruments to do that. Then a lot of discussions will happen and asset and all those things. So that exactly happened. Then the question is irrelevant whether I will buy Reliance at 2,200 level or whatever level it may be. So that topic of discussion will be going somewhere else. So what I mean to say that irrespective of market level, I have already shown you with the GDP, Indian market is going to rise from here. Why the GDP is going to rise from here, I'm going to subsequent slide. The bigger question out here will always be there is that don't play football in a ground where there is no bar post. Similarly, in investment, do not invest in any asset class without any goal towards it. Okay, it's like buying something and playing and here and there. You're not going to make money out of it. So decide your target amount on time at least. I've already mentioned that thing. I'm going to skip off a couple of technical things I've already said earlier. I'm going to make it very simple. Now the question is why the GDP is going to rise from here. Now that's a big question. So you have understand the concept about market cap to GDP. You have to understand that if GDP is moving from $2.8 trillion approximately right now to $5 trillion or $6 trillion by 2026, the market cap will also going to rise, and that's where the Sensex will move on. Okay, now the question is, the basic fundamental theme lies is why the GDP will rise. That I'm going to say, for example, and I'm going to tell GDP in a very simplistic term so that all of you can able to understand what GDP is about. Okay, now before going ahead, I want to say that do you know what is the risk factor in bungee jumping and taking selfie in a hillside? If you Google it out, you will find during the chances of accident in a bungee jumping is negligible in comparison to taking selfie in a hillside. The reason, because in bungee jumping you take all the precautions, you take all calculated risk. The data also suggests that while taking selfie is impromptu, like the scenery behind is looking absolutely great, and so you take a picture out of it. That's what exactly happened to these investors. Like they seen the pictures looking good or pictures looking bad and take the impromptu decisions, and they don't take a calculated, informed decisions. Okay, so that's very important. Like to take a calculated, informed decisions, I always say that you should have a professional advisor with you who can guide you, who can navigate you during this turbulent time or in times of confusion. So what is the GDP? Coming back to that point. Now, economics is a study of how society uses its limited resources. GDP is a measure of our economic growth. GDP is nothing but a record of transactions for a given period. Every transaction involves exchange of goods and services valued in money. Money is supplied to circulation, and the circulation of money is facilitated by the financial sector. Now, I am going to give you a very important discussions out here. Is the financial sector, like a banking sector, it's like a heartbeat to the entire economy. Like you have agriculture, you have manufacturing, it's like a hand and legs of all the body. But actually pumping happen from the financial and the banking sectors. Like they pump all the credits, all the money across all your body. Like they're pumping all the blood throughout your body. Okay, so let's look out in the banking and financial sector very deeply, and why I'm saying GDP is going to rise from here. Even if you see the Nifty figure right now, I'm just going to quickly move on to the Nifty data. Just wait a minute. Okay, if you see the Nifty data point out here in a minute, in March 2009, if you see the Nifty constitutions, the energy sector was huge out there. The banking and in the financial sector was very negligible. But today in March 2021, the banking and the financial services accounts for nearly 40% of the Nifty. Okay, and the rest is like whatever percentage I've already mentioned out here. So banking and financial sectors play a very important role in Nifty. And I'm going to see the data point. I'm going to discuss more about this data point later on because I don't want to skip the presentations in between. Coming back to where I was, yeah. So that's what. So GDP is nothing but a record of transactions for a given period of time. Now the questions comes like why the US has a so fast GDP than India? Like foolish question, right? So a lot of people ask that why can't it be? Like if I ask someone that why the US has so huge GDP than India, why they have like this thing? Why even the China itself? Let's see what exactly the data says. Financial services, low penetration in India. Like if you see bank credits to non-financial corporates, this is an India data, this is an US data. US is 84%, India is 57%. This is a 2021 data. Sorry. Digital transactions in India is the only place which has nearly touched US right now because of pandemic, because of demonetization which happened a couple of years back, which is like similar percent. Let's see all the data. Sum assured as a percentage of GDP. Sum assured insurance of 19% is 251%. Retail loan as a percentage of GDP is 13%. US is 76%. Mortgage loan percentage GDP is 6% and 77%. Credit card spend is 5%, 26%. Number of credit cards at percentage of population 4% and 337%. Why I'm saying this thing? I'm going back to the previous slides and you read this important line. GDP is nothing but a record of transactions for a given period of time, and see what exactly transactions happening in India. Now, what COVID has done, what COVID and demonetization probably has done a little bit, and probably what COVID has done, which normally we used to see in 2030, in the COVID in last 1 year has going to change this data point in next 1 year. Mind this, after 1 year, when we are going to see this, we are going to see a huge change. Already one change we are going to see in digital transactions. So in days to come, you will find more and more digital transactions coming up, and more this thing will happen in much faster space. Now, to give you an example, why I see the number of transactions will increase. You understand, if the number of transaction increase, GDP will increase. Take in a very layman language. Suppose, say for example, 6 years back, you want to buy some vegetables. You have 100 rupees with you. You go into the market and you give your fruit vendors 100 rupees note, and you give you banana or whatever these things. Okay, now that fruit vendors usually take that 100 rupees and buy something else. So the transactions move in that level, that time. And what happened right now, you go to the market, you buy banana and you Paytm him the money, just 100 rupees. The money lies with the bank. Okay, the money do not actually change his hand. It lies with the bank, but the transactions happen here. Similarly, that fellow also buys something else with that money, and money lies with the bank itself, and the transaction happens. So what I mean to say by here is that you have a multiplication happening right now because of digitalization happening. So that enhances much more transactions level. Okay, so that's one. So your transaction level will going to increase, which will push up your GDP level. I'm talking in a very, in a very macro level. I'm not getting deeper side because that will take a longer time and some more technicalities for you to understand. But just say, for example, just think that because of the digitalization, because of the demand, and because of the COVID things, and our transaction has going to increase, and it was already increased. Okay, so coming back, I just will quickly move on. Now, what happened? Like GDP in the last 4-5 years, 2-3 years, we have seen that it is coming down. Like if you see from the 2018, 17, 18 level, it has come down. And obviously for last 2-3 quarters, it has been negative because of the obvious reason. It has slightly moved in the fourth quarter. So that's what exactly happened. I'm going in a subsequent slide. You're going to see what is going to happen. But in 2022. We are estimating the GDP to be having a double-digit number because of one, the transaction is going to increase from here, and second, couple of points I'm going to show you and tell you in the next subsequent slides. So we are going to have a double-digit GDP growth rate from out here. Because last 2-3 years, we have GDP rate was down because of a lot of factors which was there in place, and a lot of economic disruption happened. A big game disruption happened, which is good for a longer term, but in shorter term, it disrupts the economy by a GST, by a demonetization. We have seen those data points coming down here. But now, when things have stabilized things, we are going to see a huge overcome of this number in days to come. Another interesting data point I show you earlier, that we are at 101% level, 102% level, market cap to GDP. And you see the different country-wise market cap to GDP. Like if you see the world average right now, it is on 31st May data. World average market cap to GDP is 129, whereas 102. So all the point that we are at extremely, costly market is wrong. We are not costly, we are not cheap. We are at a nearly fair valuation kind of thing. And why I'm saying this thing is that if you see the Nifty companies, okay, if you see the Nifty companies EPS, if you see the Nifty companies profitability large, sorry, in March, you're going to see that most of the companies, I'm not saying all, most of the companies, profitability has increased. Now, when the profitability increased, even if you have some company with a higher P ratio, if the profitability increase, the P will come down in days to come, and you will see the market is not costly, it is going to cheap. So if the profit increases, market will not come costly, because market is always a slave of earnings. Okay, so again, I'm going a little bit of technical things, so a couple of people might not be able to understand that. But going ahead to be on a normal side, I'm going to say that market cap to GDP India is at right level. So we are not costly, we are not cheap, we are exactly at the fair level. And coming back to the point, why GDP will rise from here? I've already mentioned transactions will increase, and let's see what are the other points out here. I'm going to skip this. I'm going to skip this. Okay. GDP, again, I'm not going to discuss about income, expenses, and productions. These are all way of doing transactions. Now, again, second important point, like corporate profit to GDP. Now, if we see, there is a huge correlation between corporate profit to GDP. Now, in 2001 to 2008, the time when we have seen the huge growth in Indian market, the corporate profitability as well as the GDP was rise. And in the last couple of years, we have seen the profitability is declining, so as the GDP. So there is a correlation between these two important points. And so that's what exactly I've shown below. And the corporate profitability in days to come is going to rise from here. It is already showing signals of rise from here. And as you see, the more demand and coming from in days to come. Now, there is an interesting questions I have heard a couple of days back, that why the corporate tax is 17% and why the individual tax is 30%. A lot of people has been asking that it is unfair, like individual employee has to pay 30% tax, well, corporate has to pay 17% tax. Now, you understand that for GDP to rise, there has to be much more transactions. Now, a lower GDP means an unemployment rate, and it's a complete bad situation for the government. If the GDP rate remains at this level, particular level, you will have a continuously higher unemployment rate. And in 2024, election result is writing on the wall. So government obviously will not going to see that GDP rate being at such low level. It has to rise from the present level. And the biggest important factor in rising the GDP is that your corporate profitability has to increase. Okay. Now the question bigger is corporate profitability, corporate expansion. All this has to increase, because if the corporate expand, if the corporate profitability expand, the companies, the lalas will obviously invest more and create more employment. Now, say for example, when we talk about why the corporate profit is 17% and individual profit is 30%, if a businessman do not make money, do you think that businessman will invest in some other project? And if the businessman do not invest in some other project, will it create employments? Will transactions will happen more? Not. Obviously, government will invest in some sectors, but not everywhere. The corporates, the local entrepreneurs community, they has to come up and create opportunities, spend more so that they create more opportunities. So that is one of the reasons why the corporate profit has been kept low, so that they make profit, and as such they pass on to the market by investing more. True big corporates will always try to invest more and grow big, rather than staying at the same level, because competition will not allow it, will not let it to remain at the same level. So that's important point. You're going to see that corporate profit will going to increase from here because of the profitability, because of digitalization transaction which happened, which obviously in the last 6 to 8 months, we have seen Nifty companies have grown high. Why? The reason is because of, despite the second wave of COVID, we have seen that Nifty companies have grown high because of most of the companies are working from home. They have a low cost. Most of the companies are into digitalization mode. There are a lot of reforms measures that the government has taken. There are a lot of liquidity happening in the market. So those are a couple of factors which are there. So in days to come, the big companies you will see always take the disruptions in the economy, always take challenges at a biggest tools to enhance their power and grow from here. Whereas the small companies will actually find it struggling, it hard to sustain from here. That's why all the small companies which you might be seeing across, they are struggling. But if you see the Nifty companies, do all the small companies represent any of the Nifty companies? No. So if you see the Nifty and Sensex companies, they're actually growing in the last couple of years. You see their balance sheet, most of the company balance sheet in last quarter, they have made a huge amount of profit. And this profit is going to increase from here as I show it to you. So that's the second point why we consider GDP is going to rise from here. I'm not going to discuss about interest rate, disinvestment, capex, because I move on from here. Third important point which I want to mention is the credit growth. The credit growth is one of the lead indicator for any economy. If you see the data from Sorry. If you see the data from 2020, 2010 till date, we have seen the credit growth numbers, we have seen the GDP. It has also a correlation. So we have seen the credit growth rate slowly coming down. And right now, with huge amount of surplus money available with the bank, you will see credit growth rate turning back. It's moving ahead. It's turning upside from here. So once the credit growth happened, once the bank started giving loans, obviously because of the corporates coming up, and you will see much more expansion happening. So the credit growth is going to rise from here, and that will make an important indicator why I'm mentioning that the GDP growth rate will move from here. So watch out for this important lead indicator, credit growth rate of bank, and that's the most important lead indicator why the GDP will go aggressively from here. It is already slowly turning upside and is going to up from here more. Again, as normal. So we have seen the industrial credit and we have seen the nominal. This is a direct correlation between these two lines. Okay. Coming back to the interesting point, so that's the third point I mentioned. Fourth point I mentioned that financial services and bank, if you consider these two things, these two sectors, they constitute most part of the Nifty, like 40% approximately they consider Nifty. And they have a huge correlation with the Nifty itself. Other sectors have a less weightage on Nifty itself. So let's see what is going to happen in the financial sectors. Like this is the Nifty market are not peak, not valuation, trailing PE. PE, and this is the financial. So financial are still less when we talk about the market overall. So if you see financial trailing behind, Nifty. So we have seen this growth. We have seen this Nifty PE growth, EPS growth, while we'll see the financials, this thing happen. Now, why financials sectors have been coming down? Because as I mentioned, the credit growth has not taken place. And also, unlike other sectors, GDP has to come up. GDP growth, there is a huge correlation between GDP growth and the financial and banking sector's performances. So as I already mentioned in a couple of points, that banking, that GDP's growth rate is going to increase because of political will of the government, because of transactions happening, because of corporate profitability happening. The financial will also move up from here. And when the financial move from here, with 40% weightage of Nifty, you're going to see how huge growth of Nifty from here itself. So all these are interlinked. And by way, I already showed you this slide earlier itself. Equity is a slave of earnings. This is the share of Nifty. This is the financials. This is the Nifty 50. So already I mentioned this thing. So you're going to see that the banking index, banking stocks and the financial service stocks, they are going to make a huge profit. I'm going to show you the PAT in next slide of banking as well as the Nifty, and why banking and financial service is going to make profitability, increase their profitability because of lower cost per transactions, because of complete digitalization happening in banking and financial services, more efficient, more capacity utilization, lesser cost, and obviously credit growth rate going to happen. And fourth and most important factor is the decreasing NPA level. I'm going to show you next slide itself. So that is the crystal gauging of what lies ahead. If you see the Nifty PAT, profit after tax, 19 December, September, and December 20, you see the data, it is increasing. And if you see the bank PAT, January, it is increasing. Okay, so it has started increasing. It's going to increase from here. But bank PAT, despite increasing, it has not come up overall the banking index. So you're going to see a huge rise from here itself. And I already mentioned the reason for that. I'm going to skip this measures. Okay, so before telling measures, I'm going to show you the NPA level. You're going to see that the NPA level has already decreasing because of the couple of steps which government has taken, or bankruptcy code and everything. So corporate measures, the measures which government has taken, corporate tax legislation, capex, privatization, PLI, low interest rate bank and land reforms. I'm going to discuss more in details of all this thing. Road ahead, healthy profit growth ahead. I already mentioned why. Worst behind us for the banking. NPA cycle is largely behind us. Provision coverage near all-time high. Capex revival, GDP growth recovery and government RBI policies, ample domestic and global liquidity, turnaround in corporate profitability, credit growth bottom up, reduction in provisional cost, PLI linked to investment, national infrastructure pipeline, 110 trillion spending up to 2025. So all this point, a data point giving a clear indication that GDP is going to move high from here. And if we go by the political statement, if the GDP growth rate do not increase to the level that is normally expected of by 2024, you're going to see the writing on the wall is clear. Government knows it's absolutely clear all on this thing. And if the GDP is going to rise, market cap is obviously going to rise from here. It cannot remain low, much low behind, because I already shown you the first data point about horse and a vehicle out there. Okay, so that's what is about. I already show about lead indicator. If you see a more data point, retail, if you see Indian consumption story, retail loan to GDP, you see the India is 13% only, and where you say the US is 76%, Australia is 121%. So India has, it's not started. In a vehicle today, seeing a data point, the commercial vehicle, vehicle loan today is much more lower than what the global average is there. So you're going to have a huge, by 2030, you will see this data point totally reversing from out here. Retail credit growth outpaces system credit growth. And then I show you, then I talk about the important point of number of growing transactions. Okay, now share of retail transaction. In 2014, we have a paper transaction of 85%. Today, we have a paper transaction of 23% only. We have digital transaction of nearly 56%. In 2014, it was negligible kind of thing. In ATM transactions, we have 13%. It has also increased. So what I have seen is a huge change in 2021 is we have a huge number of digital transactions happening that will enhance more and more transaction in a much faster space. Okay, so this is a very important slide about the retail transactions. UPI transactions, I don't have to mention this. We all know what is this about. It has increased tremendously and it is going to boom from here from now on. Again, banking and technology. Banking, I already said, is a lifeline for an economy. We have in pre-demonetization and post-demonetization, if you see the number of branches has increased less, whereas we have seen there's a huge transaction in credit cards, and ATM network has also gone less, but we huge transaction in digital framework. And as a result, cost to income ratio of top private bank, you see the cost to income ratio in top private bank in last 15 years. So that's what exactly happened in the banking sector, and that is the reason why I'm saying that banking and financial service PAT is going to increase from here with all the points which I mentioned. Okay, so that is my presentation from today's side. And so on a summary, I can only say that we all know that at $2.87 trillion right now in GDP in 2024, if not 2024, in 2026 is going to move probably from $5 trillion, some may say aggressively for $7 trillion. So if GDP is going to move double from here in next 5 years, okay, for all the reason which I mentioned, because we are going to see a huge number of transactions happening for all the reason what I mentioned. Corporate profitability will increase. You will see a huge credit growth taking place. Banking and financial service PAT has already increased, and it will going to increase, which is going to impact the Nifty. And obviously, and fourth and most important point, the government will not let it happen for GDP to remain at those levels. So all this point triggers to us that GDP is going to reach that level, and so as the market cap. And there is a clear indications that market is going to reach the level which I've already predicted. Now you have to ask yourself a questions by seeing this. Will Nifty become a Sensex or not? The question is irrelevant. The question is when it's going to happen, like 5 years or 10 years or 12 years. So we all know, similarly, Sensex from 53,000 level to 1,53,000 level is going to happen. Only the timing is thing. Now, we cannot predict, as I already mentioned, Goldman Sachs has predicted wrong. 150-year-old company with so rich of experience, they predicted wrong and stated in last April that Nifty will be at 9,600 level, but it is just 15,000 plus level right now. So any individuals, anyone cannot predict, but actually they can estimate where it's going to happen. So if you're looking for investment, whatever amount it may be, you need, as I already mentioned, you need to play in a football ground where there is a bar post, and do not play where there is no bar post. Do not play in a stocks without knowing where you want to go and what your investment goal and objectives are. So if you want to know more about markets, if you want to looking for an investment, just click in the link which I've given in the chat box, and I will personally get back to you and in touch with you. If you have any questions regarding market, if you have any questions regarding an individual stocks or investments or any asset class, you can always get back to me in the link which I've given there. I will call you back out there. Thank you very much for listening to today's show. and do subscribe to my channel. Every Saturday, second and third Saturday, we normally discuss about market, stocks, and companies alike, and you can always join in. I will send you the request to all of you to join this closed group meeting. If you want to have an interaction one-on-one, you can always chat with me. Thank you very much for listening today. I hope a lot of questions has been cleared to you. In case you have any more questions, do write back to me. Thanks for listening.